Hello, everyone. How you doing on this Super Tuesday? I'm sitting here with the TV on, watching all these states that are being called for different Democratic candidates, and just excited to be here. We got just a huge amount of people on tonight, and probably, I mean, in the hundreds, but we should be in the thousands, and that's what we got to convey to everyone, especially the new folks that you're bringing on. Tonight's an important night because we're going to be talking about underwriting processes. And by the way, my name is Wade Cordell. I am the Senior Funding Officer for David Allen Capital. I'm so fortunate to work side by side with David Rutz. As you guys know, he is probably the master motivator, and he's got this brilliant mind that I just can't get. I'm like a sponge when I'm around him because I'm going to learn something new each and every time that I am around him. Tonight, rather than me go into a long dissertation like I normally do to start the call, I really want to hop right into this because not only am I going to talk about underwriting tonight, I want to talk about what I do to gather clients. I look at these names on here, and there's so many new people that really are hungry for this information. I've been reading a lot of your Facebook pages, and there's some folks on here like Eugene Clapp. Eugene, I've been reading a lot of stuff that you have put up and all, and I am just so impressed with you. There are so many of you. I shouldn't even start naming names, but there are so many of you guys that have such an influence that you could bring on so many more pre-qualifications than you ever could imagine. You just need to have a few bits of information that can help you get there. So, without further ado, I am going to get started with my presentation tonight. And I see that our leader, David Russ, is on here. And David, if you decide that you want to jump in and make some comments, that's great too. Feel free to do so. So, guys, let's get started. First of all, I want to talk to you about just capital in general. You see this all the time during David's presentations, but I just want to get a little recap of our business capital. Let's just say you have a restaurant out there. This restaurant wants to add more seats, but they need 100 grand to do so. Well, where are they going to get that $100,000? They certainly can go to their savings and get it out if they have it, but who do you know that has 100,000 laying around that they can put into their business? Maybe you go to family and friends. My wife and I joke all the time. If everybody in my family were to pass away and leave us everything they have, we'd probably owe about $1 million. So we don't have that luxury, and most people don't as well. You can go to the bank if you have excellent credit, great references, an incredible business plan, a lot of collateral. But the first thing the bank's going to tell you is, hey, we're going to get you a credit card. Well, you can get that credit card if you have an outstanding credit score. But what I'm finding and have found over the last years, small business people, they're good people. They work hard. They sign their name to everything, so which brings their credit score down. So most small business people have credit scores in the 500s or the 600s. Very few of them come about that have enough credit score to get a decent amount on a credit card offered by the bank, so that won't work. Or maybe the bank will offer them some type of line of credit again. You're going to have a really good credit score to be able to make that happen. And then, of course, you can have a commercial piece of property that maybe you can put up, and that just takes a process of evaluating that property and that sort of thing. And then again, you can put your home up. This is the most frightful thing that any family can have happen to them when you start a business. You put your home up. We had a business in Oklahoma a couple of months ago that needed $1 million. Well, we were able to get them approved for 750,000 at a really good rate, I thought. The bank gave them $1 million, provided all three business owners would put their houses up as collateral. And of course, what do you think? The spouses, they were not happy about that. And two of the spouses went really berserk over it. But the one main owner that actually owned 51% of the company said, yeah, that's what we're going to do. And that's what they did. The bottom line is, though, wouldn't it be better if they would go to someone like David Allen Capital, if they knew about it, and talk to us in all of our alternative capital providers that we have out there in the marketplace that we're contracted with? To me, that would make more sense than all these other options that we're talking about here, being able to get a non-collateralized funded deal. Now, the big thing that you've got to understand, guys, is that most businesses don't even know that we exist. You are tasked with one major thing, and that is to get the word out, tell the business people that you are a capital agent in your local town, in your communities, in your county, in your state, in the country. You've got to let people know about that, and let them know that we represent all the top alternative providers out there. And of course, many providers equal better offers for clients. It's quicker approvals, better funding. It's kind of a one-stop best offer shop. And you have it at your fingertips, but you've got to let people know about it. Now, our process is really simple, but it's effective. Our experts take the lead. Each and every one of you have your own replicated site that David Rutz is giving to you at no cost. He understands the value of being able to start a business without having to go into debt. And you can, if you haven't taken the time to go through this, you need to look at your site. Someone goes to your site, they click on the business capital, you're going to see our leader. There's that handsome devil right there. He is going to be talking to that small business person, covering all the different aspects of what our funding is all about, some of the qualifications that are involved in the funding process. And then, of course, it's going to answer a lot of the questions that they may have. Once that business person says, hey, you know what? I think I want to get qualified, and they click the button to see if they can actually get funding. This is an important part of teaching here. This pre-qualification page, guys, is not the application. We don't even have enough information on it. There's nothing about credit. There's nothing about anything except how much business are you doing, where are you located, what are you looking for, and then they submit this. And look at this, the bottom of this pre-qualification page. It's going to have your name on it, and your ID number is all hard coded into your page, so that you're going to get credit for every single thing that happens that goes through your site. Once we get that information, our DAC team is going to take over. We got some really professional people. They know what they're doing. There's no need for you to go out there and have to gather any kind of paperwork. You don't need to have to talk to your client. We're going to go out there. We're going to get these packages in, which is usually a one-page application, bank statements, driver's license, voided check, and of course, if we need financial information because it's a large amount that the business person is seeking, then of course we're going to get that information as well. You don't have to worry about it. Then we're going to go out, we're going to find the best offer out there. We're going to present the terms to your client. They're going to sign either, in most cases, a DocuSign or online checkout, and then we're going to wire the funds to your client. And guess what? You get paid anywhere from 4 to 6.5%. Now, we're not going to go over the commissions tonight. That's not what tonight's webinar is all about. But tonight, you do need to understand you're going to get paid very handsomely for introducing small business people to David Allen Capital. Now, tonight, I want to cover what I call underwriting 101, and then a whole lot more than just that. I think it's very important that you understand what we look for when we decide that we're going to fund a deal for you. It's a very complicated process, but it's actually very simple as well. And I think the more that you know, and the more that you educate yourself, and you educate the agents that are part of your team, the better off you're going to be, because you're going to be able to answer questions that maybe you feel a little hesitant about. But I think it all starts with the qualifications. Number one, we want them to be in business at least 4 months to get capital from us. We want to be located somewhere in the United States. The credit score needs to be at least 500 FICO. Let me just be honest, if it's below 500, they got a restaurant that's doing tens of thousands a month with hundreds of transactions a month. We can probably overlook the below 500. The annual revenue does need to be 100,000. We got over 700 different industry types that we serve, or very few industries that we want or can't get funding for. And then we look at the NSS, and we're going to tonight educate you on everything that we're looking for when a package comes through our doors. It all starts, of course, with the application. And here are some of the questions that we get from you guys regarding the application. Number one, why do I need to complete an application since I already did the online with the pre-qual? Well, here's the problem. Number one, and by the way, you shouldn't be doing the pre-qual for anybody. You need to get that small business person to go on and do and complete the pre-qualifications for a lot of reasons. But the main reason is if you're out there and you're working a bunch of leads, you don't know these people from Adam, and you're putting all that information on there, and they didn't really give you permission to do that, that's wrong, and it's going to cause issues. But the application is not the pre-qualification online. That is exactly what we say it is. It's a pre-qualification. You got to have this one-page application completed. Why can't I use my own application that's not a DAC application? Well, I'm going to give you a great example that happened today. We had someone that was turned down because they got a criminal background. They went to prison, and I won't go into what it was for, but it was serious. Now, this person says, well, why, I'm upset that you guys are turning me down because you ran a background. How did you even have permission to run a background? Well, we have permission because on our applications, if you look at all that written language at the bottom, it gives us permission to look at their credit scores. It gives us permission to run any report we want to, and it gives us permission to share this with any of our lender partners. That's why we're going to use our own applications. Our applications have been approved by every one of our lender partners. This is serious stuff, and you need to understand that. That's why we don't let you use your own personal application. Well, why can't I send a DAC application that can be DocuSigned, or why don't you accept electronic signature? Well, we can on a lot of instances, but here's the problem. Let's say that you give me a file, and that file has an electronic signature on it. We only have about 30 to 40% of our lender partners that will accept a DocuSign electronic type application. If the DocuSign wasn't originated with the lender partner, it's no good in their eyes. And so they want a wet, hard signature. That's why we have to have that. You are really, when you get involved and you get this small business person to send you the application, and it's all electronic signature, and you send it to us, you just eliminated most of the top lender partners on the planet. And you don't want to do that, because you want to give we really cherish that saying, one stop best offer, and we can't give them the best offer if everyone doesn't look at the file. Okay, now going a little bit further with the application must be completed. That means you have to have the small business client to complete as many or most of all of the sections on that application. We absolutely have to have the tax ID number. Now, I understand that if they are sole prop, that they, in a lot of cases, they don't have the tax ID. Well, that's fine, but we've got a section at the top right where you put down that, or they'll put down that they're a sole prop. These are things that we have to look at on every single application before we can even submit it to the underwriters. You got to have all the personal information on each owner completed. That includes their name, address, social security number, date of birth. And a lot of you have said, well, why in the world are you messing with that? I'm sending you a copy of their driver's license. I'm telling you that 8 out of 10 times that driver's license information does not match their current address. So we need that, and we've got to have the social security number. We've got to have the date of birth. The application has to be signed, as I said, and it's got to be dated. Do you know? And it's got to be dated within 30 days. If we don't have a dated application, almost probably only a third of our lender partners will even look at the application. They pop it right back to us and say, nope, it's got to be dated, because they don't want something that's been thrown around to like a shotgun blast to all these other lenders out there. And that happens. There are some agents that we have that have signed up with David Allen Capital that are working and giving us all the garbage stuff that nobody else would take, because they're doing that shotgun approach, hoping that just one person would take this file. The problem with that is the credit scores are going south when you do that. We, on most of our situations, do soft credit pulls, so you don't have to worry about that. But I'm telling you, that's not the way it works in this industry. If one unscrupulous group gets their hands on that application, they're going to pull that credit maybe 12 times. That the application has to be legible, guys. If I can't read it, the underwriter can't read it. If the underwriter can't read it, they're going to kick it back. So there's a lot to this application. We take our time, we look over it. These are things that are done in our office before as we package deals up. So I just hope this is a lot of good information for you. And by the way, some of you have been trying to find where the application is. It's in your agent resource center, like almost everything else is. Now, here are the documents that are needed to be submitted to underwriting. We got to have the following documents submitted on every single deal. Number one, we got to have a signed, dated, and completed application, which we just went over. We got to have the last 3 months of bank statements. Now, if it's a seasonal business, we're going to need a complete year of bank statements, and that way I can go to the underwriter and say, listen, I know in the last 3 months they haven't had a lot, but this is what they do in this time of the year, and a lot of that plays into how much they're going to get today versus what they're going to get in 90 days. We got to have a copy of the driver's license on all owners, and the driver's license has to be active. It can't be expired. Now, we can submit without a driver's license, but here's the problem with doing that. When we submit without a driver's license or without a voided check, and it comes time to fund, then we got to go chase these people down. Here we have a lender ready to get this funding done, because they moved this thing very quickly with a DocuSign agreement or either online checkout. You get it done, and guess what? You think you've got it done, you really don't, because now we don't have a driver's license voided check, and they won't even, by the way, even issue a DocuSign or an agreement without the copy of the driver's license on all the owners and a voided check. And the voided check has to be for every single bank account that was submitted. The voided check must have the name of the business on the account. You can't send me a starter check. If they don't have a voided check because they never write checks, then we have to go to and get them to go to their local bank and get a bank letter. That bank letter will have the name of the business. It'll have the account number and the routing number. It'll be signed, stamped, and dated by the bank person, whoever submits that letter to them. So all of this is just really important to understand. We got to have these documents. Now, deals over 100,000, they're going to require more uh, information, like the most recent tax return and possible additional financials, like a P&L balance sheet, work in progress report, AR, AP. For example, I've got a client that I got 350,000 for a few months back, I think 7 months ago. They're coming back in and meeting with me tomorrow because I have hands on with my clients, and they want another 400 to 600,000, which they can get because they're doing about 11 million a year in funding. I mean, in revenue. Well, my client already knows to bring the P&Ls, the balance sheets. I mean, I've already given them everything, and we're going to do the same thing. We got one pre-qual in today that wants 500,000, and I've looked at their bank statements, and they have enough revenue coming in. But we went ahead and got the P&Ls, the balance sheets. These are simple things. A P&L and a balance sheet is not a tough thing for a business person to get for you, because most of them have it on QuickBooks and they can hit a button and have that go through very, very, very quickly. So I'll get off of that right now. The next thing that we need to talk about is how much funding can a client actually receive? And we're going to talk about that based on the type of paper that we have. When I say type of paper, I'm talking about the type of paper being what does a credit file and the entire file looks like to the particular lenders. What we have to judge when we receive all the paperwork is, do we send this to our A paper lenders, our B and C, our D and F? And what makes it simple is I've got guidelines, so I know right up front what that is. Now, sometimes we don't, because we don't pull credit here at David Allen Capital. It happens through the lender partner. So, and when I say pull credit, I mean a soft pull. A paper lenders usually will provide up to about 200% of the client's monthly average revenue over the last 3 months. So if they're averaging 300,000, they could probably get up to 600,000 if it's an A paper lender. The B and C, they're going to give about 125% of that amount. And the D and F paper, now this is usually the types of businesses that are in a restricted category, or it's just a really bad credit file. They're usually going to get somewhere between 50 to 100% of that client's monthly revenue over the last 3 months. And I know some of you said, "Oh, wait a minute now. You said they're going to get, if they do 10,000, they're going to get 10,000." Well, that's actually very true on an average file. But I just showed you they could get 20 if they're A paper. They could get 12.5 if they're a B and C paper. But if they're really bad paper, we're gonna struggle to get them even 100%. But here's the real brilliance of what we're doing. Even on a really, I won't say bad file, but a really challenged one. Let's say we only, and they want 10,000, we can only give them 7,500. The good thing about that is, once they, and let's say that 7,500 is only for a 4-month period for 80 payments. After 45 days, and that's 45 business days, the client will have been paid in close right at 50%. What that means, they are now a client good standing. So now we can resubmit that for a refi to all of our folks, because they're already proven that they understand this type of funding and that they'll make the payments, and we can get them more money than what they asked for initially. So this is kind of how the whole system works. Okay. Does credit matter? A lot of you guys get upset. I shouldn't say a lot. Some of you people get upset with us because you say that we're telling you credit doesn't matter. That we've never said that. We said that revenue always trumps credit. And hold on one second. I just got to. Sorry, guys, just one little thing here. Okay, sorry about that. So credit always matters. We look at revenue over credit score, but that doesn't mean that a client can receive funding should their credit fall below 500. Now, I've had a 426 get a FICO score get funded, but that was a restaurant, and they had hundreds of, well, not hundreds, but really close to 100 deposits on a monthly basis. So that's one situation where credit absolutely didn't matter. That being said, we still look at credit, even though revenue trumps credit. Credit determines rates, guys. The higher the FICO score, the better the rates. Credit also can include more than just what the FICO is saying. If a client has great FICO, however, they're currently behind on child support, they got all these tax problems, or they got all these, they're just overextended completely. This will impact what the offer is going to look like. You just got to understand that. I mean, if you think about it, it makes perfect sense. So what determines a client's rate? Well, the FICO score. The higher the FICO score, the better the rate. The type of business, the better the rate. Businesses that fall in high risk category are always going to have higher rates, regardless of what their credit score is saying. Bank statement analysis, things like average daily balances, ending monthly balances, the number of negative bank days, the number of NSFs, the number of MCA funding. All this plays into the part of what they're going to pay for the funding. And guys, these bank statement analysis, we do a lot of it in our office before we ever submit this package to underwriting. We've been doing this so long that we understand what we're really looking for in when we have a bank statement um, that we're going over before we submit. And the first thing that Brad, myself, and all of us look for is how many NSFs do they have? How many negative days do they have? That sort of thing. So these all play into determining someone's rate. Well, every day I get someone saying, well, what are our rates? Well, I'm going to give you a great layout of how rates are really kind of determined, not including the actual review of the bank analysis. But rates vary on every file submitted. Rates vary anywhere from a 1.19, and it's never going to be less than that, to a 1.49. And you say, well, I don't really understand what you're saying. Well, look at it this way. You borrow from one of our lender partners. Let's just say you borrow a total of $10,000. You're going to pay back somewhere between 11.9 and 14.9, depending on where that score comes in at. So when we're talking about factors, that factors times whatever it is that you're borrowing from our lender partners. So in the case I was just showing, whether you pay like 11.9 or 14.9, then we have to just the underwriter is going to decide, well, okay, we've got the rate now. How long are we going to have it to pay back? So it may be 6 months, it may be 16 months. All that varies, and the underwriters make that final decision. We don't. So when someone comes and says, well, that's a 19% interest rate, no, it's not. It's a factor rate. We're not interest bound. None of our fundings are based on interest. They're based on rate, the total cost of capital. Now, excellent credit, 700 FICO, you're going to pay, your rate's going to be probably somewhere around a 1.9 to a 1.29, and it could vary because after they review your bank statement. Good credit with good revenue, it's somewhere between 1.29 and 1.39. Decent credit with decent revenue, about a 1.39 to a 1.42. Bruised credit, then that's below a 600 FICO. Well, that could be a 1.43 to a 1.47, somewhere like that. But if you have cheese cracker credit, and by the way, this cheese cracker credit is something that I joke with Matthew Dehane, because he actually sent me a beautiful, funny sweatshirt with a pack of cheese crackers on it, and because I always talk about if their credit is so bad that we shouldn't even loan them enough money to buy a pack of cheese crackers, but we do anyway, they could pay a really outrageous amount for this funding. So if they borrow 10,000, they could pay back 14.8 to 14.9. You said, well, man, that's ridiculous. Why would someone do that? Well, let me tell you why they do it. Because a small business person can take that 10,000 and turn it into 20 or 30,000, or they maybe just need the extra funding to help them go fight another day and be in business because there's too much month at the end of the money, and they want this capital to help them. We never want to put them in a worse position than they are when they met us. But on the same token, um, sometimes they have to prove themselves to our funders. Remember, these are non-collateralized signature funding. So if someone takes that $10,000 and they can just prove, even if it's a higher rate for at least 50% of the time that they have these funding in place, then we can get them additional funding at much better terms and rates. And so sometimes you have to pay the price for what the bad decisions you made in the past. So what are automatic declines? Well, the following will always result in an automatic decline. If they got past MCA defaults, then that's an automatic decline. Now, MCA means any kind of merchant cash advance. In our industry, advances have been really missed. What the word is, I guess the word is, they've in the past, merchant cash advances were tied to credit card merchant advances. But now in our industry, everybody kind of uses it for everything, even for the ACH funding, which is what we do. But so any kind of funding like what we do, if they defaulted in the past, they're not going to get funding with us. There are a couple companies who actually go out and fund them at stupid rates of about a 1.6, 1.65. We're not getting into that industry. They call us all the time wanting us to do that. We're just not going to do it. Number two, past criminal dealings and any financial issues, drugs, spouse abuse. This was added because we on the spouse abuse, we just don't want to deal with anybody that has beaten their spouse. We're just not going to do it. It's something that our lender partners don't want to be part of as well. So criminal record counts, and let me tell you about how we do that. The final thing that we perform before we ever fund anyone, after we do the funding call, we do everything, then they pull a background check. The reason that's the last thing that we do is very simple. That is because it's the most costly thing that we do. So we don't want to go wire money to someone who's uh, had a criminal enterprise in the past, or they got convicted of financial fraud, that sort of thing. So if there is a criminal record, they're not going to get funded. If they have more than 5 NSFs during a month, unless they all came on it, they could have 30 that hit on the same day because a check came through you didn't know about, and that's okay. But if you got 5 NSFs throughout the month, that can cause a problem. More than 4 negative bank days. Remember, there's only 20 banking days, maybe 21 in most months, Monday through Friday, not weekends, not holidays. So these negative bank days make a difference. Just understand, if you got 4 negative bank days, that means there's 4 times during that month that lender is not going to be able to get their money. Refusing to allow bank verification. We're going to get into detail about that in a moment. But if they won't let us verify their bank account, and I'm going to go over what that is in a few minutes, then we're not going to fund them because there's always a reason that they don't want us to look at it. Negative current bank balance. We will not and cannot, through the bylaws of almost every funding partner that we have, our lender partners, those partners will not fund anybody if you're negative in your bank account. As a matter of fact, if you don't have at least enough money to make 2 or 3 payments on that funding, 2 or 3 daily payments, and those daily payments amounts isn't really there, they may not fund you there. I got a lady that was negative $180, and I couldn't get her funded. And I basically said, you got to go out and get $300 in your account, make it positive, and then I was able to talk to the underwriter, work through it. This all takes time. It's a process, and we got her funded. If they're not U.S. citizen, and let's say that we do have one lender that will fund we do have one lender that will fund if they're not U.S. citizens, but almost all of them won't. And if you have one owner that owns less than 51% that is a U.S. citizen, and the other one is not, you're not going to get funded. It's just the way it is. You've got to be a U.S. citizen. Or if the bank statements are manipulated or altered, and you say, well, how in the heck can you do that? I have what's called a PDF editor. I can change PDFs all day long. And people can buy that. They can download it off the internet. They can change their bank statements. I see it day in and day out. Brad and I look at it, some bank statements that come in and say, oh my God, these people are just so crazy because they changed their bank statement, but they forgot in the very small part of the statement where it says a date, they forgot to change the date from September, where they changed the bank statement to October. So we look at that as well. But I'm telling you, getting past these underwriters is going to be very difficult. And that's another reason that we do bank verification. Some other reasons for the clients are they may have too many MCA positions that cause the lender some concern. We can put up to 6 or 7 positions, believe it or not, but we're never going to put these small business people in a worse position than when they met us, and we would be putting them in a worse position by giving them a 3rd or 4th position funding if they don't have their daily balances, aren't there to make those payments. And daily ending balances maybe are too low. And if we look at those and we determine they're too low, the underwriter's just not going to allow them to put themselves in a burden. If we discover that the applicant does not own the business, usually there's a question. If there's any type of question, we can get the articles of incorporation. Sometimes, like in states of like Wyoming, Delaware, and Nevada, that's probably not going to work. So we'll need a previous tax return if there's a question about who really owns the business. So we'll ask for a Schedule C or a K-1 tax. Trust me, if I am asking the small business person for proof of ownership, it means there's something in that background of investigative through the Secretary of State or wherever that shows somebody else owned that business 6 months ago. Or if they receive funding from another lender that we're not aware of. And that's another reason that we do bank verification, which we're going to get into right now. Bank verifications are conducted for 4 main reasons. Number one, we got to verify the current month's revenue. If the client has a huge drop in monthly revenue, month to date, which is kind of out of the ordinary, then the client may not be able to afford the funding that we're offering them right now. The second reason we verify is to verify the bank account's active. I mean, there has been times where the lender partners have wired money into an account that was closed, and it's hard to get your money back when you do that. They want to verify that the client's not accepted additional funding from a competitor during the underwriting process, because we have this happen a lot. Well, they'll go apply with 4 different lender partners. They only should be getting 10,000, but they get 10,000 from 4 different lenders. They're not going to allow that to happen. So that before they wire the funds, every lender partner in the industry is going to make sure you haven't accepted money. And they want to make certain that the bank statements that we have on hand to underwrite the entire funding have not been altered, have not been manipulated. How do we verify? Well, there's 3 ways that we do our bank verification. The most popular way is through what we call Decision Logic bank verification link that we send to the client. This is the way that the client can prevent our lender partners from seeing their username and password. We're not trying to get their username and password. And even if they did give it to us, they could change it the next day or in 15 minutes if they wanted to. This is conducted through the ACA network, and it's extremely secure. This is what the banking system uses. This will allow us to look at their account, make sure they're positive in their bank account, make sure that nothing's been altered on their bank statement, make sure what they're telling us is accurate and they haven't taken any more funding. We can do that through a quick decision logic, which most people use. We can screen share. If they don't feel good, they don't understand technology, we can conduct a screen share where the client can go on their own screen, allow us to share it with them. They go in and put their username and password. We can't see it. And then we just tell them where to click and we go through their bank statements like we normally would do. And then of course, month to date bank transaction report. This is where the client downloads from their bank account this report. This option is done on accounts that have extremely good credit. I'm telling you, if there's credit issues and all, they're not going to allow them to do it that way. It's important to note that most of our A paper lender partners, these are the top ones that we have that will give the most funding, that deal with the best credit folks. They don't even conduct a bank verification. So these are, I mean, I'm sure you're writing down questions, email them to me afterwards, and I'll be glad to answer anyone that you don't know. So after all of that, we conduct what's called a funding call. Most all lenders, except A paper lenders, conduct one final call to the client before wiring the funds. This is called the funding call. Now, there's two reasons for it. Number one, the lender partner wants to record that the client accepts the funding and they understand the terms, so that they can never say, well, no one went over it with me and I didn't understand it. And that way Cordell was a fast talker, or that agent was a fast talker. Number two, the lender partner wants to make certain that the broker agent nor the DAC team has signed any of the paperwork in place of the client. See, if DocuSigns go out and that agent has given us an email that's really their email and they complete that, that's wrong and that's a problem, and they're just going to make sure none of that happens. So that's why a funding call is done, to go over the agreement and have it recorded. Do clients have to print off funding contracts? There are three ways that we complete the funding paperwork, guys. We send the funding contracts through what we call DocuSign, and in most cases, this is the way that we're going to do it, where they just simply go to the email, click on, I mean, all of you have seen documents that you can electronically sign. Secondly, we may send one to what's called online checkout. All of our A paper lenders have online checkout. You go, they send you a link, you click it, you go to that online checkout, and you just answer all the questions. At the end, you hit the button that says wire, and the money's sent to you. But the old-fashioned way is where the client's got to print it off and sign it, and that still happens for those with really poor credit issues. Lenders require a wet signature for folks who are questionable at best, and so if we can't, if they're not allowed to do DocuSign, the only other way is for them to sign it. Then they're going to have to scan it, get it all back to us. We don't have to have originals, but we will have to have it scanned. We don't accept faxes. Faxes just come out so bad that none of our lender partners will ever allow us to accept fax again. Okay? I know I'm pretty late here, but I want to keep going. This is important. Underwriting timelines. Well, they vary on file to file. Good credit files are normally going to take 3 to 24 hours and we'll have an answer. Files with credit or unusual issues take 24 to 48 hours, and files that are really bad or high risk business, they can take up 4 to 5 days in underwriting. It's just the way it is, because you really got to look at every aspect as an underwriter. And then they do what's called syndication. They may want 2 or 3 of the companies go together and they syndicate the deal so that they can not have as much exposure for that funding. Why do some clients receive multiple offers and some only one? Well, clients with higher revenue will always receive multiple offers, since multiple lenders have bid on our deals, and so we can get the best one. But clients with poor credit and they're really, really, really bad, maybe that cheese cracker credit I was talking about, they're going to have higher rates and they're not going to have a lot of offers and a lot of options that are out there. But we're going to try to get them some options. Let's talk about equipment financing guidelines here. I'm just about through here. What are the required documents? Well, we have the same application for equipment financing. Got to have the driver's license on all the owners. We've got to have a voided check on all the accounts. We prefer 6 months of bank statements. We will accept 3, but we really want 6. And a copy of the invoice of the equipment that's going to be financed. Now, that equipment cannot be bought from an individual. It's got to be a reputable dealer that they're buying it from, and they can't go into a business, say, I'm buying a business and I just want to refi all of this equipment. Well, you're going to have to get funding for that because almost no equipment lender is going to let you go in there and do that. Can startups receive equipment financing? Startups can receive equipment financing provided the owner has a credit score above 600, number one. Number 2, they got to already be incorporated and registered with the Secretary of State. In other words, if their new startup is just on paper and a thought and a great concept, that doesn't work. They already have to be incorporated and registered with the state for doing business. They got to have a bank account already established, and they got to be purchasing new equipment or used sold by a reputable dealer. So yes, we can do startups, but they do have to have higher credit. They do have to be in business, literally in business. They have already got to go through the process of incorporating their business. They already have got their bank account set up. Then we can talk to them. Okay. Here's the section I'm going to go through very quickly about finding new clients, because I think that's important. There are so many of you on here are new, and I want to talk about me, not what I want to tell you what I do weekly, not what you need to go do weekly, but here's what I do. I mean, why is it that as busy as I am, I'm still funding more new clients annually with higher funding amounts than any other agent? I'm not saying that to brag about anything. I'm telling you this to not to impress you, but to impress upon you that doesn't matter how busy you are, you can always find time to be successful in this business. I'm not suggesting that any of you guys are not busy, but if you are, these are still great activities you can accomplish each and every week. Number one, the things that I do to find clients. I send out 1,000 emails daily to business owners nationally. This will only work if you have a great email strategy with a company that has its own scrubbed business email list already in-house. A company that has an email system in place that will provide you daily updates, daily open and click rates. Dave and I are experimenting with one such company, and thus far, I've been funding an average of 1 deal monthly. Once we establish this work successfully every single month, we're going to share this with you, the name of the company and the cost. But I send those out every single day. It's already, as a matter of fact, it's on a system for small business people. There's 35 to 65 million small businesses in their database that's been scrubbed. Number 2, I pass out as many postcards as I can. My wife passes out a minimum of 25 weekly as well. Some she actually would just be in the parking lot of a Walmart, of a Costco, of a Sam's, and she sees a truck or a car that's got a wrap around it that said maybe a business truck, a painter. She always would go stick one of those cards in the windshield under the wiper. I use a drip campaign to send either text or emails to previous prospects every single week until they tell me not to contact me anymore. They're just not interested. These are people that I may have talked to. I got their business card, so I got all their information. I don't do this to folks that I don't know. It's only the people I've already met. I place ads in strategic locations like the financial section of Craigslist, and yes, it's worked for me. It doesn't always, and when you put an ad there, you're going to pay $5 or $10 or whatever that amount is in that particular area, and sometimes it works. I have bulletin boards. David's always in a coffee shop. Now I always hear about him sticking his card in different places. I go to a bathroom in a restaurant that's got a bulletin board. I'll stick it on that. I'm going to put I have these cards everywhere I go, and I'm going to put ads for clients everywhere I can find them. I continue to ask my current clients for referrals every single chance I get. I usually call them once a month. Hey, how you doing? just want to check in with you. Let me know. I'll be back with you in a couple months when it's time to see if you need more capital. I joined 2 local chambers, guys. I've one home builder association. I've set up booths at each of them. I've obtained 2 new clients through the home builders membership and none through the chamber yet, but I've got 3 prospects from the chamber. These association business, they work, guys. These are things that busy people can do to get new clients. My personal opinion in regards to DAC postcards. Now remember, this is me. This is not David. This is not the DAC thing that says, hey, you've got to do it. This is what I personally believe. I personally do not believe that I could be successful without the DAC postcards. I could not be. I know this script inside and out. I can answer every question that your client asks. I don't worry that they're ever going to ask me something I can't answer because I've been doing this so long. However, that postcard is a miniature billboard and I carry it everywhere I go, and I'm going to use those. I think they're essential to my success. And by the way, we got 1 DAC approved card to use. We prefer you go to DAC Agent Resource Center, order them. We no longer order cards from Terry Williams, but if you already have cards through him, you can certainly use them. There's nothing wrong with them, but we've got a professional looking card, which you can see here, that David personally laid this thing out. I think the way it's laid out is laid out better than any other card out there. If you have not ordered these, I just think that you're wasting a lot of valuable daylight by not having these where you can give yourself the best opportunity to succeed. I want to thank you guys. If you have any questions, I mean, we've been on here a long time. I hope that I have, made it worth your while to be here. And I definitely want to answer any questions you have. And David, if you're on here, you can type. I mean, you can hop in and we can talk as well. Let me just look through. Thank you, thank you, thank you. My sound is bad. Well, you know what? Sorry about that. You're a rock star. No sound at all. Appreciate it, Wave. I can't hear. I have led the horses to the water, but trying to get them to send docs over has been tough. Well, you know what? Let us handle it. What is our site? David, you on? Can everyone hear me fine? Our site is, I mean, when you say what is our site, everyone has their own website. Every agent has their own website. It's davidallencapital.com/ whatever your agent number is, Kathy, that is your site. davidallencapital.com/ whatever your agent number is, that is your website. Great information. Answered a lot of questions. Thank you, Timothy. Seasonal business, they must be in business for at least 1 year because you need 1 year statements. No, that's not necessarily true. But if they have been in business for less than 1 year, and they are seasonal, I just need whatever and listen, if they want funding and they got no revenue coming in right now and they're seasonal, they got to wait for the season. You got to have revenue 12 months a year, even if you are a seasonal business, because you got to be able to pay it back now. So yeah, you would need to give me every statement that they have thus far. How does a business that has clients that pay them net 90 days look with our daily, weekly ACH? Oh, in other words, how do they feel about that? Well, let me talk to you about daily and weekly. Because these are non-collateralized signature funding, there are no such things as monthly payment options. If it's a good credit file with good revenue, then we can get weekly payment options. But if it's not, it's going to be daily, Monday through Friday, not weekends, not holidays. And that is the only way that we can provide non-collateralized funding, because as money churns on a daily basis for these lender partners, they're going to be able to afford to do more deals that way. Let's see. What if someone has a prior criminal record over 25 years ago? Well, Mike, the bottom line is if it's a financial record and they find it and it's, I don't care how far back, usually most of them go back 10 to 20 years, but if it's over 25 and they don't find it, fine. But if they find it, it doesn't matter how long it is, they have the option to not fund the deal. Now, if it's not a terrible crime, I mean, they could have gone to prison for something else. But if it's not, maybe they had a DUI, that's different. But if it was a financial crime, they're probably never going to get funded in our industry. Is this slide presentation in our Agent Resource Center? Not yet, but we'll let, I mean, David usually puts up some in the Agent Resource Center. He'll post what our webinars, if that will help. Let's see. Sorry, guys. I know you can hear me clicking here. I'm just trying to find. As far as we're not doing accounts receivable financing, we're certainly looking at it, but it's all about cost versus the time it takes to do that. So, but we are looking at that. Sound is fine. Thank you, Kathy. Good information. Thanks, guys. Thank you, Eugene. Again, I really appreciate, I really like reading your information, guy. You really put out some good stuff. Is it okay to make up a card while you're waiting to get your drop cards? Anything that you put together, by the way, you can go into the Agent Resource Center and there are flyers and all this already back there that you can use those and print them out. It's just an expensive way to do it. But I really believe that we're turning these cards around very, very quickly if you can go to our back office. And again, with all the hundreds of people that are on here still right now, if you haven't ordered these cards, I've got like 10 sets of cards that I have ordered since I've been here, and I've run out of them. I give them everywhere. I leave them everywhere. I don't care. If I go through a car wash, I leave 5 or 6 sitting out there hoping someone will pick it up. Can we order the new website with ID? I'm not sure what you mean by that, Richard. Great, helpful information. Thanks, Francis. Is there a prepayment penalty for our loans? Sam, there are no such things as, we don't have any of our lenders that have a prepayment penalty. A prepayment penalty, guys, just so you know, means that if you pay it off early, we're going to penalize you and make you pay more for the funds. But that doesn't mean you get to walk away from the funding, the cost of the funds. You, in most cases, will only get a discount of about 5 to 10% of the balance. But I want you to understand, with some of our very top A paper lenders, let's just say that you're 50% done, and if you want to renew funding with them, they wipe away all the future cost of funding that you would have. So, in other words, you get to wipe away all the costs that you haven't used yet, and that happens with the A paper. The regular funded deals, which is about 75% of them, you're going to get a 5 to 7 to 10% discount. Thank you, Wed. Thank you, Jeff, Richard, for spelling and typing. Apologies. That's okay, Francis. would a phone list work better to directly call business owners instead of mailings? I don't. I think a phone list would be great. You got these brilliant people on here like Matthew, and I mean, he's a pro. He knows how to make these. Me personally, I personally wouldn't do well just picking up the phone and calling businesses. That's just not my style. I do the email to 1,000 businesses a day, as I told you, and I pay someone to take care of all that through that system. But as far as calling, I think calling is great if you've got that personality and you can do that. Can you order cards with both businessman and the other 500 with women? I don't know if you can break it down like that or not. So I have 1,000 male and 1,000 female. I order those right away, just depending on who I'm talking to. All right. Okay. How do you order the DAC cards? Well, Kathy, go into your agent resource center, look over to the left and scroll down to where we talk about marketing material. And you can click right there and it'll take you to the page that you register to order your cards. Can we fund businesses making less than 100,000 a year? Can we? Yeah, but we're trying not to do that. And I'll tell you why. It takes a lot of work to make a very little bit of money, and by working with people that are doing less than 1,000, so 10,000, 100,000 a year. So if they're doing less than 8,000 a month, you need to stay away from them. Okay, are there success stories of funding published somewhere with DAC? Need to borrow some stones before I get my own. Well, I mean, we talk about fundings all the time. I can tell you that I have my own personal references because I got people funded, but I'm not going to share them with the company because as soon as I do, I'm going to have 1,000 agents using that one person for all these people to call. So I create my own through my own personal clients. If and you can, I'm sure you can understand that, but we don't have anywhere where we share information about the clients. But I see all the time on the Facebook page where the agents are all basically, saying, hey, I got so and so funding. I think it'd be great. I think David would agree that, hey, if people want to put on there, today I funded a barbershop. Hey, thanks DAC, we funded a restaurant 100,000. That's okay. But when you start talking about how much money you make, which is you walk in the line with the FTC, or you start talking about commissions, all that stuff, we want to stay the heck away from that. We don't want any issues with any regulatory people. And that's why you see David so many times over and over again saying, hey, most people won't make any money. Most people won't do this. Most people won't do that because most people won't. Great webinar. I have some questions. Can I please get your email address? Okay, I'm going to end it right now with my email address. My email address is Wade, W-A-D-E, at davidallencapital.com. Wade at davidallencapital.com. And if I got to spell David Allen Capital for you, then you got more problems than my email is going to help you with. I'm just kidding, guys. All right. God bless you. Thank you guys for being on. It was a big audience tonight, but I hope you can see how important it is, guys, to get the new people that you bring into this business on these webinars, because a lot of the information that I gave you tonight, think about it. It's invaluable. It can be very helpful to the success of your team. Go out there and do great things. God bless you. Have a good night.